in constant currency terms, the industry size grew about 11.4% to $245 billion from 226 the previous year. We have been a net hirer, meaning adding jobs to the economy of the order of about 290,000 jobs during the course of the year. That's broadly in terms of the quantitative numbers. Equally importantly, from a qualitative point of view, right, if you look at the industry in terms of the mission criticality, innovation and sophistication being embedded more with the business rather than being limited to a technology or IT side of the house, there again, you will see a lot of data in the review to follow where Indian firms are embedding themselves more and more on the strategically relevant areas of our customer industries. Similarly, from a growth point of view, while there are a lot of concerns on whether the coming year is going to have recession and so on, you will find that there are a few really bright spots in terms of industries that have done well, BFSI, manufacturing, to name the top two. And from a geography point of view, North America and APAC have done quite well too. Broadly, those are the few key points that I would highlight before. I don't know if Debjani, Anand, you want to add anything or we want to throw the floor open? Yeah?
Anand, do you want to say anything? Sure. Okay. So we'll get into the presentation and then we'll open it up for questions. Okay. So first of all, just, I don't know how many of you were in the room and listening to the fantastic conversation between Rashad, Amit and Abha on inclusion. You know, as an industry, we take a lot of pride in being very inclusive, but looking at this room, I have to say hats off to the media industry because this is fantastic. This is, you guys obviously are the poster child for inclusion, and I know several of you, and fantastic. So, again, as Kavita said, it's really good to be here in person and do the strategic review presentation once again in person with all of you. We'll cover three things: the year that was, then what is the outlook beyond 2023, and what is the new playbook that's emerging for the industry for this no normal future that or presence that we are talking about. If you look at 2023, I think take a step back to 2022. 2022 was the year of milestones, big milestones. 2022 was a year of resurgence where against and all the industry came back and absolutely shattered all records. In that in background, I would say 2023 has been, 2022 has been a year of resilience, a year of focus on foundation for building strong resilience that will allow us to continue to adapt and grow, leading to strong, stable revenue growth as well as business growth across sectors. So I think that's how I would look at 2022 versus 2021. We saw continued revenue growth, as Krishnan just called out. We added around 19 billion in revenue last year. The core sectors, US was strong, Asia Pacific was very strong. Sectors like BFSI, manufacturing, health. We saw double-digit growths in ER&D. We saw strong growth in GCCs. India continues to be a preferred country for GCCs. And we saw very strong growth in domestic market. I mean, that was a good surprise. In terms of lower growth areas, I mean, primarily Europe was a low growth year for us last year. And sectors like travel, utilities also did not pick up as much as expected. As Krishnan said, we created around 290,000 jobs, new jobs. So we continue to be a net hirer of employer of people. 36% of our workforce today are digitally skilled. And that's a very important number because that is what builds India's competitive advantage when it comes to attracting investments and when it comes to getting projects by the Indian companies. That is an extremely important number. And 2 million of our workforce are women. And it's also good to see that when you look at the total employee strength that the tech industry in India has, we actually employ across 165 plus nationalities. Talking about startups, it was also a year of growth for startups. We added roughly around 1,300 plus startups, so we are roughly at around 27,000 startups, tech startups by end of last year, 23 new unicorns. Even though we talked about the slowdown in funding, the funding winter, what we saw was there was a balance that happened. So the funding shifted towards the early stage startups, and it was the growth startups that actually saw the slowdown happen. But net, if you look at it, around 25% growth in early stage funding, which is not a bad thing. And of course, domestic opportunities, unprecedented. We've all been talking about DPIs and the opportunities they create. Also, the India thought leadership that is now getting significant momentum, especially with G20 presidency. Techade has become a buzzword, and I have to call out Sangeeta and Kavita, who came up with that word in 2019, and today everyone from Prime Minister to everyone is using it, and it feels amazing because I think that word really captured the sentiment about this decade. If you know, we've talked about the growth, as Krishnan said, when you look at it in terms of constant currency, we grew around 11.4%, the export revenue. When you look at it in reported currency, because of the headwinds, we lost around 2 points in the cross-currency events. But overall, I think 245 billion is a fantastic number. So we've grown from 226 to 245 billion. We've grown across all sectors, with ER&D leading the growth. I think hardware was the only sector which is stayed saturated for a while now, but we've grown across BPM, ER&D, GCC, and of products, and of course exports. And it was also good to see the growth in domestic revenue. Some of the key sectors, we already talked about this. We've talked about which sectors grew, which didn't. The growth in digital today, roughly around 32 to 34% of our revenue comes from digital, which is a growth of around 16%, driven by emerging tech like analytics, cloud, cybersecurity, etc. We had nearly around 65 plus new GCCs added. So the GCC count has gone up to around 1,570 plus global GCCs, and a lot of them are focused on R&D versus just back office operations. 11.1% growth in ER&D and 30% growth in number of deals. All of these are very healthy signs in terms of building a resilient ecosystem. We saw strong M&A drive and 7% increase in M&A transactions. The focus on deep tech continues to grow, but I stay convinced that we have to do much more in this space. Though we have today around 3,000 odd deep tech, truly deep tech startups that are using technologies to build solutions, 3,000 of 27,000 is not a very large number. And especially when you look at the funding that's going into deep tech, it's never enough, but it is small for India. So I think this is one area where we need to pay a lot more attention. And when you look at the large industry, as well as startups, there was a lot of focus on R&D, and I think it's fantastic to see how innovation, as I said this morning, is coming to the forefront. Nearly 73% of all the tech patents filed in 2022 were in emerging tech, and that again is a very reassuring sign. We'll talk a bit about talent, because this honestly is our biggest strength. We are a knowledge economy, we are a knowledge industry, and what differentiates us, what builds our competitive advantage is the digital mastery that we build, and that's, again, comes from the kind of people that we employ and that we grow. So 5.4 million industry today. I talked about nearly 2 million digitally skilled people, which is a excellent number, and we'll have to continue to grow that number with focus on quality. We did a recent study to understand AI skill penetration, and India was #1 in AI skill penetration. We were #2 in AI, machine learning, BDA talent pool, and we were 3 in cloud professionals. I mean, these are fantastic numbers, and this is why India continues to be seen as a talent nation by the rest of the world. 2 million women. In fact, I was surprised to see 70% millennials, 20% Gen Z. That means people like me are just 10% of the industry. I mean, once again, it's a minority. So but it's great to see how young this industry is becoming. 85% still operating in hybrid, and we've talked about that. A lot of focus in tier 2 to tier 3 cities. Good news, attrition is slowly beginning to decline. And very good news, offshore is increasing. And I think that is a very strong signal for India. If you look at the domestic market, we saw adoption of emerging tech going up, again driven by cloud, cybersecurity, AI. The focus on digitization, the focus on integrating technology into pretty much every aspect of life is really paying off in India, be it financial inclusion and what UPI is doing, healthcare, and now especially as we grow the National Health Mission. I think all of this is creating tremendous opportunities for startups as well as large industry. Enterprise technology adoption is also growing and growing healthy, and consumer tech adoption in India. I mean, Indians are like fish in water when it comes to technology. We take to technology so fast, so it's not a surprise to see the kind of growth we are seeing in consumer tech adoption. In terms of headwinds and tailwinds, if you look at I'll start with the headwinds first, right? I do believe that we are seeing delayed decision-making, especially as the concerns around the world about recession, the Ukraine war, Ukraine-Russia war, and how that's going to play out. It continues to linger. These are not going away anytime soon. And this is resulting in delayed decision-making, which will have some sort of an impact on the industry. The second big headwind for us is the employability gap in India. While we have a very large talent pool, we have over 15 million freshers, graduates, engineering graduates coming out every year, all of them are not readily employable. And that becomes a big problem because once you bring them on board, the training, the investment that companies have to make is often not fully understood. It's a huge cost of investment. And unless we bridge that employability gap, that is going to become a problem at some point in time. We do see demand contraction in some markets, but tech spending overall continues to grow. And emerging tech regulation, no one knows how that will play out. It's something we are watching out for very closely. And I think as Nasscom, our biggest advocacy in that space to government is can't be regulating technology. You cannot, no government can regulate technology. You have to start regulating use cases. You have to look at risk-based use cases and figure out how to regulate use cases. And I think that's the shift we have to see. In terms of tailwinds, very robust deal pipeline. We have 18 billion plus, just the top 5 companies, and that's all fingers crossed, a very healthy sign. We have 10% growth in client base. We have around 6 to 7% utilization headroom, which is also a good thing for our industry. And increasing enterprising tech across the world is a very strong sign. With McKinsey, we recently had done a very extensive CIO survey, and I'll talk about the 2 big things that came out. One, CIOs expect spend on digital to absolutely continue, but priorities will change in the current macroeconomic environment. A lot of the spends are are going towards the day-to-day automation processes in order to boost productivity, boost efficiency. And the second big change which is happening, which is very good for us, is we are seeing buying preference change where they're looking at the service companies and saying, you're not a service partner, but you're a transformation partner. And this is becoming the preference over looking at just service vendors, which I think is fantastic for us because that's the mindset that our companies have, and that's the role we are playing globally. So these are the 2 big takeaways from the CIO survey. Spends not declining, but priorities will change. And if you want my business, you have to be a digital transformation partner and not just a service provider. These are the two big things the CIOs are telling us. So given all of this, when we look at the playbook for navigating growth in the no normal future, few things that we know for sure. Demand shifts are going to happen. Geopolitical dynamics, they're going to stay tremendously volatile. We do not know how to predict this. I don't think anyone knows how to predict these. So we will have to figure out how to adapt. Tech regulations will continue to evolve, and we'll have to very closely watch this space because this can have a huge impact on our industry. So change is the only constant, as cliched as it sounds, for our industry. And I think in that note, building resilience becomes the #1 priority. The transformation from service providers to digital transformation partners is going to be key. I think the industry has actually started that process several years back. And today, when you look at it, I think the India tech industry is seen as one of the preferred digital transformation partners for the world. Trust, resilience, inclusion, talent, digital talent, and sustainability. These 5 things are going to rewrite rules of competition. You are going to win a business or lose a business based on how good you are on each of these areas. And I think this has to become a core integral part of every CEO's playbook. And last but not the least, this industry has to really lead with digital mastery, and they have to lead with innovation. India will always and hopefully always retain some level of cost advantage because of the diversity that we have, tier 2 cities, etc. But it can't just be about cost. In fact, today companies say, we look at India for cost and we get engaged with India and we realize the power of your talent and innovation, and that's why we continue to stay with India, right? That's the storyline, and we have to absolutely sharpen those 2 things, talent and innovation, as some of our biggest competitive advantages. So with that, we'll throw it open for questions.
Yeah, Ayushi from Hindu Business Line. Just a few follow-ups. You talked about how the tech industry is still seeing some sort of headwinds that are coming from delayed decision-making with everything that's going on macroeconomically and geopolitically. So the IT sector is usually what we talk about that is being impacted from the delayed decision-making and how it affects the deal pipeline. But beside that, what are the other verticals within, or what are the other industries within the tech space that will be impacted as a result of this?
You covered the point about how generally when this question is asked, it's about the IT sector, and the impacts on that are fairly well understood and documented. More broadly, from an Nasscom point of view, it's not just about IT services. It's about startups, it's about the global capability centers, it's a SaaS company ecosystems, and so on. Right? I would look at it in terms of where in the customer's value chain do our member companies play. Right? Some companies will have a value proposition to the tune of to the cost and optimization side of their business, and there'll be others who will be more towards innovation, growth. How do you find new product introductions, and so on and so forth. Right? Today, the notable change from the last year, if you will, is about getting the belts tightened. Let's get our cost structures right. Let's be as efficient as we possibly can be. It's a very big focus across industries. Obviously, in preparation for the expected inflation, who knows if it's going to come, and if so, when it's going to come. But most customers want to be ready for it. So to that end, cost and optimization initiatives are getting a priority. So in our industries, who are the players that focus on that will benefit from that, and vice versa, if you will. Right? So I won't say it's some industry across the board will benefit, and some industry subsegment within the Nasscom industry segments that will get across the board impacted. But it'll be about the individual value propositions that the member companies are focusing on.
Just one more question So there has been, telcos have started to raise an issue. They were inherently just talking about OTT companies, but now they are trying to increase the ambit for tech apps and like any kind of tech company offering services on the telecom network, potentially paying a particular fee to the operator to sort of recoup on ARPU costs. So what's Nasscom's stand on the matter? If you could give us some insight there.
Right now, I don't have an answer for you because that's a sector that we are not directly involved in, but we are looking into it. We can come back to you with an answer on that one. Okay.
Hello, everyone. This